Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain and Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. My name is David Blain. Thank you for tuning in to today's show. We've got a lot of great information for you. So much, in fact, that I had a hard time deciding today what to cover. It's a lot of stuff going on in the world, the federal government and budgets and investing and commodity prices, and of course it's tax time. So we've got a lot of things to cover, and hope you will enjoy today's show. As always, let's give out our phone number here real quick, 252-633-0107. Our email is allthingsmoney@dlblain.com. And you can visit us on the web at www.dlblain.com. We love to hear from our listeners on 94.1 FM, WNBU, as well as our viewers, Cable TV 10 in New Bern. Any comments or questions you have on the show, as well as topics you might like us to address, or anything else, we'd love to hear from you. So, without further ado, I thought I'd kind of ease into the show today and talk a little bit about taxes. It is the 5th of April, and this year you got a couple extra days to get your taxes in. The deadline for federal taxes is actually April the 18th this year, which is a Monday. Friday the 15th is the District of Columbia celebrates Emancipation Day, and so it's a holiday in the district, and so the IRS, I guess because their headquarters is there, has postponed the deadline. So you've got that extra weekend to get your taxes done. Hopefully you won't wait that long. I know in our firm we usually the last week before taxes is pretty calm, because we really encourage people to get this stuff in ahead of time. Not too far ahead of time, especially if you're an investor and you get Form 1099 dividend or 1099 interest. The past 4 to 5 years have been notorious for brokerage firms amending these Form 1099s. Now, it's not necessarily their fault. A lot of it has to do with the classification of dividends and qualified dividends and foreign taxes paid and a lot of these unusual things. If you just invest in, say, Coca-Cola and get your regular dividend, that's pretty easy to figure out. But if you have REITs or energy partnerships or things like this, these tend to be amended a lot. And so for people that get those type of investments or K1s, we generally recommend that you don't file until at least April the 1st, because there's a good chance that your 1099 will be amended. Anyway, what I want to talk about, this was came out on CNN Money by a guy named Blake Ellis, and this relates to tax audits. Several shows back, I had mentioned this. We spent a couple of shows on audits and how they work, and this dovetails nicely into what we've been talking about. And the headlines is that 78% are done by mail and not in person. And this is very important for people to realize. The sort of dreaded audit of the IRS agent, coming to your home and auditing you. Well, first of all, you should never let them in your home. You should meet at your CPA's place of residence or the IRS's office or some neutral place. Never allow the audit to take place in your home. But anyway, the point is that out of the 1.6 million Americans that got audited last year, 78% were correspondence audits and only 22% were asked for an in-person exam. That's a 13% rise from 2009 and a 93% jump from 2003. That's a huge jump in correspondence audits. And when people think of audits, they think of, sitting down with this IRS agent across the table and, getting grilled about, that $5 charitable deduction that you made to your church and, being terrified of going to jail if you can't find your receipt. Well, that's just not the case. It's one of the biggest reasons for this shift in the IRS is simply cost. It's cheaper for the IRS to send you a letter saying you're being audited, please send us this information, than it is to take a field agent's time and do that out in the field. They also have found that people don't like to get these notices from the IRS, and when they get a notice, they typically respond, and they typically do everything to resolve it as quickly as possible so that they don't have to see the IRS agent. So they've had a lot of good success with the paper audits, and I think it's good. A lot of it is stuff that they can match by computer, or things that they're targeting. Like we had a client that claimed their child, actually, who was 18, claimed the first-time home buyer credit of $8,000 a couple years back, and the IRS audited virtually all of those claims. Things like the earned income tax credit, they will audit a lot of those. And so when these paper audits, they usually ask about a specific item, as I just mentioned. Another example had someone that went through a paper audit. They asked them to substantiate their educational expenses. They had deducted $30,000 or $40,000 worth of educational expenses, and so they asked them to send in the receipts, copies of the receipts for that. So that's typically what one of these correspondence audits do. The other big part of correspondence audits is simply matching. If your W-2 says you made $100,000 a year and you file your tax return in line 7, wages, and you say that you made $90,000 a year, well, that's going to automatically trigger an audit because the computer won't be able to match things up. And so, the good thing about it, I like the paper audits because typically the IRS focuses on one or two things, and if you hopefully have the backup documentation for it and you respond in a timely manner, the whole thing goes away, and they don't have an opportunity to dig into a lot of other questions about your return. The bad part about it is a lot of the jargon that they use in these audits and the forms, it's a big packet of paper, can be very confusing to taxpayers as to what exactly they want. And so a lot of people, including the taxpayer advocate, Nina Olson, they're trying to work on these audits to make them so they're not confusing, so people don't get overly intimidated. And if they use a preparer, most preparers will handle this for the taxpayer. But if you didn't use a tax preparer, they want to make it so that you don't feel intimidated and you can confidently send them the information that they need. Well, we're coming up on a break here in a few seconds. When we come back, we'll wrap up this about paper tax audits, and we'll talk a little bit about supply and demand in the markets. So for All Things Money, I'm David Blain, and we will be right back after a few short messages.